Welcome. My name is Kathy Onan. I'm the manager of internal training at VectorVest, and I'll be bringing you this special presentation. This week, we'll reveal the second place winner in our Midas Touch Challenge, which was introduced back on January the 23rd. Last week, Todd Schaefer, manager of research, revealed the secret sauce to the benchmark back test. He also revealed the third place winner, who was Ed S., who collected a cash prize of $750. Ed had a winning score of 680, and this week I'll be presenting the second place winning trading plan. And I'd like to congratulate Ken R. on his great results. I had the opportunity to speak with Ken this week, and we talked about how he used 3 of his favorite indicators within VectorVest for his results. So today we're going to go over the agenda. We're announcing the second place winner. As I said, it's Ken R., who did a great job with this. And we're going to go over Ken's trading plan. We'll also show you how you can easily replicate their work so that you can back test this trading plan over other periods of time and maybe incorporate other stop criteria and things that you may want to change to make it more applicable to your trading style. So let's take a look. Here on the home page of VectorVest, I'll move over for those who want a quick review. If you'll go to the Views tab, change your date to January the 23rd, you can find the information on the Midas Touch Trading Challenge. We have the cash prizes. Again, last week, Ed S. received $750. This week, we're awarding $1,500. For those who would like to review last week's presentation, just go back to the Training tab, choose the VectorVest University, and this will take you out where you can watch last week's Strategy of the Week if you'd like to hear Todd Schaefer review the benchmark and also the third place winner. But I'm going to move us over into the back test and let's take a look at Ken's trading plan that got him that great second place result. Ken was able to outperform the third place winner without adding additional drawdown. So we'll move over to the back tester. Here we have Ken R. and his final results. As far as market timing, it was unchanging. Our start and end date for the contest, he ended up with a total value of $475,000. He had winners 48.74. Last week, the third place had a higher percent winners. However, the gain was much less. So we have an overall gain of 375%, commission 7,820, with an annualized rate of return 184%, and a drawdown of 14. Below we see that nice equity curve, starting out very smooth, nice rising pattern. Most of the drawdown came from this point with a slight pullback, but overall this is a beautiful equity curve. With a commission of $7,800, that's about 780 trades or 32 trades per month. So when you're looking at these back tests, realize, would this be a trading plan that you would use? But 32 trades per month, that's about 8 trades per week, so not too bad. Let's take a look at the settings on this back test. We'll go up to Edit, and we see the trading system listed. He's buying long, his search Midas Touch, and we'll go into his specific parameters, and let's look at his stop criteria. If I go to Customize Trading Plan, again, we were not using any market timing. Automation Rules, the Midas Touch, KSR. This search will be added to the cherry picking folder for your use as well so that you can test this. For stop criteria, Ken used a trailing average true range stop. Anytime you select a stop criteria within the VectorVest backtest, to the right it gives you the definition of this stop. And a trailing average true range stop, the stop criteria will be met if the stock's price falls by the multiplied average true range amount from the highest price the stock has reached since the trailing ATR stop was implemented. First, let's think about average true range. Stocks trade within a range, and the look back period that Ken used is looking back 10 periods. He's taken the range that the stock typically trades in and multiplied it by 1.35. So if the stock falls by that multiplier of 1.35, the stop will be met. One of the settings that Ken chose not to use was simulate intraday stops. He did not use this. He was trading as if he was an end-of-day trader. Under the more settings, Ken was trying to maintain 10 positions, automatically replace closed positions when they're stopped out, remembering not using any market timing. One of the settings Ken used as well, he was only opening 5 stocks per day in a single day. So on his opening first trading day in our history, if you pull the transaction report, you'll see he bought 5 stocks the first day and 5 stocks the following day. And then as he hit his stop criteria, he only would open a maximum of 5 stocks per day if that were needed to fill his 10 position portfolio. He invested the average portfolio value, odd lots, limiting repurchases, and the other standard criteria. So those are the settings for the back test. And I'll take us up to one of the reports. Under the Reports tab, if we look at the summary report, we had his best trade was long 12,090 shares of APT with a gain of $69,600. His worst trade losing about $9,500. Here's our commissions that he spent, $7,820. If we scroll down through the report, we can see the diversification in the positions that he was holding at the end. And here are the backtest settings. These backtest settings are attached to this presentation as a PDF for your review. We're also building this under an existing custom trading plan in the backtest setting so that you can easily replicate these. So let's take a look at what criteria or secret sauce that Ken was using to get these great results. From the Unisearch tab, you will find the Midas Touch KSR in the cherry picking group heading or folder. So here's our criteria. With our standard settings, average volume, a 50-day moving average of at least 100,000 shares, which was one of the rules. Ken chose to have stocks not paying a dividend, so the stock dividend yield will equal 0. One of our rules, not choosing ETFs short. Using those favorite indicators within VectorVest that Ken likes, he was using stock RV, relative value. We're looking at the stock's price appreciation potential. RS, relative safety, that indicator of risk, finding those companies with good, consistent, and predictable earnings. And the comfort index. The comfort index, that's one of our great technical indicators. It looks at price growth persistence. Stocks with a high CI tend to go up more than they go down. They withstand those long, lengthy downturns, and their graph patterns will be a smoother pattern from lower left to upper right. So Ken chose the best combination of value, safety, and comfort with a lower price, and that operator is greater than a value of 0.05. To make sure that the comfort was still rising, Ken chose for the stock comfort index to be greater or equal to 1 week ago the stock's comfort. So we know the comfort was either rising or at least not falling. The stock price was greater than or equal to $1. The relative safety had to be greater than or equal to the score 1 week ago. We have the stock watch list equal to the Midas Touch stocks. And Ken also added another liquidity factor. He added that stock volume that's actually trading at the time of the search greater than or equal to at least 100,000 shares. But part of the power of any search is the sort. So Ken used that combination of value, safety, and comfort divided by price. So we've got great scores on these two fundamentals, RV and RS, and a technical comfort index looking for price growth persistence at low price. So that's the parameters or the secret sauce that Ken used for his great returns. With this great search and the back test giving us those great results, let's see how Ken scores compared to our benchmark and last week's third place winner. Our model had 44% winners, annualized rate of return 34%, with a drawdown of 7%, the Kalmar ratio of 4.19, and an overall score of 63.51. That was the benchmark to beat. Last week we had Ed with 79% winners, an annualized rate of 134, a max drawdown of 14, a Kalmar ratio of 6.4, and an overall score of 680. Now this week, Ken was able to improve the annualized rate of return, but he had percentage-wise fewer winners. His percent winners was 48%, but look at this annualized rate of return. It jumped 50%. It went from 134 up to 184. The max drawdown was about the same, 14.17, with a Kalmar ratio of 8.13, giving us the overall score of 731.10, giving him that second place winning score. If you'd like to replicate his approach, we've made it easy by adding his trading plan as a template in the Backtest Portfolio Manager. When you're ready to run this test yourself and make any changes, if we create a new backtest, you can select an existing trading system. This brings us to the end of this week's presentation. We hope you'll join us back next week when we reveal the grand prize winner, so you don't want to miss the secret sauce that won the Midas Touch Challenge.